Well, welcome everyone today to the next webinar in the Tourism Resiliency Program that British Columbia Tourism Regional Secretariat has been very involved with. And we have a distinct honor to have this next webinar on cash flow strategies and government incentives and how the tourism industry can prepare. But I want to take this time, first of all, to thank each of you for joining this webinar this morning. It will be recorded and posted on the Tourism Resiliency Program website. And there will be time for questions at the end of the presentation using the Q&A function at the bottom of your screen. And Ellen Walker-Matthews from the Thompson Okanagan Tourism Association, part of the British Columbia Regional Secretariat partners, will be there to monitor the questions and ask the questions of our speakers this morning. Myself, my name is Glenn Manzik. I am the chair of the British Columbia Regional Tourism Secretariat, as well as the CEO for the Thompson Okanagan Tourism Association. Our partners in the resiliency program, this is a long-term resiliency program providing BC businesses, tourism businesses, with meaningful one-on-one support to navigate the impact of the COVID-19 pandemic and adapt and work towards eventual recovery. The partners that you see on the screen here, from the Tourism Vancouver Island to Northern British Columbia Tourism, to Kootenay Rockies Tourism, to Cariboo-Chilcotin Coast Tourism Association, and finally to the Vancouver Coast and Mountains Tourism Association, and through the partnership with Destination British Columbia, make up the partners that are delivering this webinar today. If you'd like to register for the program in your area, please visit tourismresiliency.ca and you'll learn more about this initiative. There are a number of businesses that have already begun participating in this initiative with the resiliency program. Over 1,241 businesses are currently engaged in the resiliency program one-on-one support, and over 3,000 businesses have been contacted directly by phone to really talk through some of the issues and challenges that I know that you're facing right now as we move through this very, very challenging time for the tourism industry. I want to take a moment to acknowledge our funding partners and other partners. Without them, this program does not exist. So I'd like to acknowledge the organizations you see on this screen, and just know that we're adding more each and every day as different organizations are stepping up and stepping in to providing support for business at this critical time. So today's webinar is about cash flow, which we know is a fundamental issue in business activity. And during these uncertain times and mass disruptions in organizations of all sizes in North America, it is important for the tourism industry to prepare. In today's webinar, our expert panel will discuss government relief packages for tourism, short and long-term funding opportunities, how to mitigate disruptions, what short, medium, and long-term actions are required to overcome the challenges, and finally, a framework for business continuity. And we're very fortunate today to have two distinguished gentlemen that are going to present their expertise and their backgrounds into providing you that support. The first gentleman is Quinton Pullen. Quinton is a chartered professional accountant and tax partner with BDO's Kelowna office, with over 13 years of public practice experience. Quinton's primary focus is on providing tax planning to owner-managed businesses, particularly with respect to divestiture planning, mergers, acquisitions, and corporate reorganizations, and cross-border transactions. He has experience in helping clients with tax problems ranging from immigration to emigration and U.S. personal tax compliance and planning, to helping create international financing structures for large multinational entities. He has experience in working with clients from a wide range of industries, including technology, farming, retail, and tourism and hospitality. Quinton loves to teach, and certainly we're very fortunate to have him teach us today. Jocelyn is a manager based in Kelowna office and is responsible for the Southern Interior British Columbia, including Penticton, Summerland, Naramata, Oliver, Vesuvius, and Princeton. And Dustin joined BDO Canada Limited in 2010 and has experience in assisting individuals with debt solutions through the use of various strategies. Dustin has also completed certification as an insolvency counselor to assist individuals through that insolvency process. So we, as you know, we believe very strongly, and we, as Thompson Okanagan Tourism Association, we have a very strong relationship and partnership with BDO Chartered Accountants, and we're very honored that they've brought their experience and expertise to this webinar series. And so with that, I'd like to turn the floor over to Quinton and Dustin to lead the discussion over the next little while.
Perfect. All right. We can get that to start. There we go. So Quinton, I'll let you start and we can go from there.
Perfect. Thank you so much. Thanks, Dustin. And thanks, Glenn, for the great introduction. So as mentioned, my name is Quinton Pullen. I'm a tax partner in the Kelowna office at BDO Canada. And today we're here to talk to you about a number of different things, as Glenn mentioned. If you want to switch to the next slide, Dustin. So I'm going to talk briefly about government incentives. Now, I'm assuming at this point, a lot of you have already heard quite a bit about what programs are out there with respect to the different government stimulus packages. Now, I'm not going to get into too much detail here. I was just going to do a high-level reminder of what some of the changes that have recently come up, and then I'm going to move on to Dustin, who can get into the meat of the presentation, which is really going to be cash flow strategies, which is something that that I know everybody really needs right now. So a couple comments on how some of the changes that have happened with the CEWS program. So the CEWS program is the 75% wage subsidy. Now, a lot of you have likely heard about this, but you may not have heard about some of the changes that have come up recently. So first of all, the program initially started mid-March and has been extended for another 12 weeks up to August 29th. So it's going to continue for a little while longer, which is great, right? Really helpful. But they've also come out and proposed a number of changes. Now I say proposed because these changes haven't yet passed. So we're still waiting for the government to approve them and for it to get through. I don't foresee there being any issues here, but they haven't yet passed, so we can't actually apply under these measures quite yet, but we're getting really close. So the first one here is the second baseline remuneration period. You may ask what that means. Well, the way the program works is if you have employees who are, whether these be maybe good employees that you don't want to, you want to keep, but you don't have enough work to keep them going, so you're keeping them on the payroll, or any employees that you're working a little bit less than they were last year, right? And say you didn't have them working in January to March this year because it's seasonal business, but they worked at some point last year, say March to May 31st. Well, now you can have this second period that says, hey, look, if they worked for March to May 31st in 2019, and then they are again working now, but they're making slightly less money than they were during last year in 2019 during that period, well then the way that the CEWS program works is they will actually let you claim the 75% of their wages up to 75% of what they were making last year, which may be more than 75% of what they're making this year, and can be paid up to 100% of what they're making this year. So you may be in a situation where you have employees who you can get their entire wages up to the cap, of course, of $847 per week, but the entire wages up to that point being covered by the government. So something to think about. This rule has been in place for a while, but they had this previous baseline period, which was only January to March 15th. Now, I know a lot of businesses, particularly in the tourism sector, that are more cyclical. They may not have had employees hired during that time, right? So they may be rehiring people over the summer, and they may not have been working during that point, so they couldn't take advantage of this rule. Well, now this is out. We're just waiting for the government to pass it, and then this can help boost up what you could possibly get as a remuneration from the government. Another point here, and I don't even have it on the slides here, is for organizations that use a central or a separate payroll organization, a separate payroll company, right? So sometimes we have a couple companies get together and then they have one separate entity that pays all the employees. And previously, these structures have not been eligible for the CEWS program because the payroll didn't happen out of the operating company. So this has been cleared up, and going forward, these situations will still be covered. So the businesses, even if they aren't the ones paying the payroll, they should be okay. Now, third, we've got amalgamations. So if they're in a situation where you purchased a business a year ago and now you're looking at it, you're making more money than you were a year ago because you have now two businesses that are being covered, but you're still not down the 30%. So you otherwise didn't qualify. Well, now that you get to look, when you're looking at last year, you get to look at both businesses. And so you combine both of their revenue and say, okay, did I make that 30% revenue decline and be eligible for the CEWS program? So this was something that unfortunately had been missed when the legislation came out, but is now being covered. And finally, I just wanted to talk a little bit about the SECRA. They love their acronyms over here. But this is the commercial rent subsidy. So again, this is something that you may or may not be aware about, but if a landlord makes an agreement with their tenants to reduce the rent by 75%, then they can be eligible for a 50% subsidy from the government. So this is something, if you're in a situation, if you qualify for this, it's something that could be very worthwhile to encourage your landlords to go for, right? Because maybe, I know a lot of businesses out there, they aren't able to pay their full rent. And this way, if they make an agreement with the landlord to reduce the rent a little bit, well, they can reduce it all the way down to 70 or down by 75%, and then the landlord is better off and they can do okay. So, everybody wins. But there's that. There's a lot others. There's a lot more going on. I don't want to get into too much detail here because I really wanted to focus on cash flow strategies here and let Dustin take it away. So if you have any questions afterwards, I'd be happy to answer them, or you're welcome to contact me after the show and be happy to chat at any point. So Dustin, moving on to you.
All right, thanks, Quinton. All right, so just kind of a quick introduction of myself. I am a licensed insolvency trustee out of the BDO Kelowna office. I do service the South Okanagan, so Penticton, all the way down to the border, Princeton that way. And we do have offices all around BC and across Canada as well. So if there is any questions, I mean, we do have offices in PG, Langley, Vernon, Kamloops, everywhere. So at any point, anybody can contact our department, the financial restructuring services, just with questions about either cash flow, what happens if there's too much debt, things like that. That's kind of our primary kind of resource. That's what we do on a regular basis, is help people with their debts, whether it's through some sort of restructuring or just a general conversation about cash flow. Maybe they're not in that position, but yeah, you just need a little bit of help with the cash flow. So that's what we do, just kind of at BDO as part of our department as well. Our values are fairly standard across all of our offices, the firm: honest and integrity, the quality of work, respect. It's just kind of the way we treat people. We want to build them up, because people that are coming to us, yeah, they're not in a great position. So we want to treat them as human beings. We want to build them up. We don't want to kind of drag them while they're down here. So that's just a little bit just about our values there. So getting on to kind of the cash flow part, the biggest issue that most seasonal small businesses run into is just the lack of a roadmap, the lack of a plan. So first thing you want to do is you do want to talk to somebody about putting together a financial plan. And it's not just plan A. You want to have plan B, C, D, E. You want to look at all of the different scenarios that may come up when you're preparing your cash flow, because yes, the COVID-19 was the major issue, but being in BC, the Okanagan, we run into flood issues. All around BC, we run into fires, smoke. So the tourism industry is always being hit with some sort of issue, whether it is kind of the natural disasters or just, yeah, poor weather. So by having those multiple plans, then you can at least start planning for different events if they happen to come up. And you can see here, I mean, the plans should be conservative. So you don't want to say that, yeah, your revenues are going to be too high, because if something comes in that you're not expected, you do want to kind of understate the revenues, so you've got that kind of plan in place. Overstate your expenses a little bit. That way you're kind of planning for the worst, but hoping for the best is kind of the way to look at that. And then as far as kind of once you've got that plan in place, you do want to look at it kind of on a regular basis. So whether you're looking at it weekly and seeing where you're at and what's coming up for the rest of the month, looking at it monthly at the very least would be kind of the best thing, because then at least you can see, okay, what happened in the last month? Were we on target? And then you can start kind of planning for the next month as well, because it's one thing to actually have the cash flow, the budget in place. It's another to start looking at it and reviewing it to make sure that you're still on track with whatever your plan was. And then that's kind of the biggest thing with the plan, is you do want to make sure that it can be adjusted for any changes that might come up, because things happen. Life is always kind of revolving around us. If we all lived in bubbles, that would be great. Then we could set a plan and it would never change. But life doesn't happen that way. So you've got to have some flexibility in that plan to say that if this event happens, okay, how do I adjust for it quickly? And then the last thing was just with the kind of creating that roadmap is pay attention to the details. So go through, when you're creating a cash flow, go through every source of cash that may come in or go out, no matter how big or small it is, because the small things, they'll start adding up on us. So some expenses that most people forget about would be bank fees. So you want to make sure that when you're planning your cash flow, you kind of account for the bank fees, service charges, kind of all those little things that we don't really see on a day-to-day basis, but they do come out and they do affect us. So it's always kind of paying attention to just even the little things. They will make a huge difference once you start kind of moving forward. And then as far as that plan goes, you just want to know where you're at. So once you've got the plan, reviewing it, like I said, so best way to do that, kind of take a look at it, do regular bookkeeping. If you're doing it yourself, that's fine. There's no issues with that, but make sure that you're doing it on a regular basis. Don't let the receipts pile up. Don't kind of put them in the corner and do them every 3 months or 6 months. If you can do it on a daily basis, it'll save you time in the long run. If you can do it at least weekly, that at least gives you the information that you're looking for. But the problem with bookkeeping is it does take a lot of time. So a lot of people, especially in a small business, they don't have the time to both run the business and then do the bookkeeping afterwards. So yeah, using qualified people, if you can find a good bookkeeper, BDO does have an outsourcing and bookkeeping department that we would be more than willing to talk with you, just kind of set that up. And the old adage of you get what you pay for, it really is true, especially with bookkeeping. If you're not paying a whole lot, that's fine, but you're not going to get a whole lot out of it. So yes, there is that trade-off. It can be expensive for good people, but good people will produce good results, which then also helps to kind of create a better cash flow for the business. And then understanding the financial statements, that's kind of the big thing there. So once you've got the profit and loss statements, the balance sheets back, really kind of understanding what that information means and how it does affect you. And that's where someone at BDO can help you, one of the accountants. If you've got any questions, yeah, you can always ask, well, what does this actually mean for me? How does this fit into my cash flow? Yeah, just any of those simple questions, just ask. Never hurts. All right, so the biggest thing here, creating a cash flow is one thing, but once you've got the cash flow in place, Revenue Canada is always the one that you want to make sure that you're looking at paying. Don't ignore Revenue Canada. It's never a good idea because they will never leave you alone. That's kind of the easiest way to look at it. So just file the returns. Worst case scenario, if you don't have the money, talk to them. Revenue Canada, as scary as they are actually willing to assist you, but you do have to have a plan in place. So you've got to think before you phone them, what's my plan? How do I approach this to kind of work with them before you're on the list for them contacting you. And as far as that plan goes, they're not going to go for the never plan. So basically you can't phone them up and say, well, I'll pay you $50 a month for an infinite amount of time. Revenue Canada won't go for that. They're not that nice. Typically they want to see any sort of money paid to them within a year, because once that year rolls through, then you've got next year's or the current year, and then you're always kind of playing catch up. So they don't want to stretch it out for too long if they can avoid it. So there's that. And then as far as kind of when that cash comes in, so when you're creating that cash flow, you can't assume that all that money coming in is yours to spend, because it's not. You do have to pay tax. Small business, there is tax that you have to pay. So really the best suggestion I could make is anytime you get paid, or if you do it monthly, that's fine too, but do a calculation and maybe take 20 to 25% of the profits for the month and say, you know what, that's not mine. Put it into either a separate account, a trust account. It's basically not your money. You have to survive on the after-tax money. So if you put it aside, then you can start using that cash, kind of the after-tax cash, as your plan for the business. Also, by setting it aside, then when the time comes up that you have to pay CRA, you've got some money set aside. So that's one suggestion. The other suggestion that I might make on the Revenue Canada side would be, instead of putting money into a separate account, your savings, whatever it might be, do an installment payment. So just of that 20%, pay that 20% right to Revenue Canada, because then it's out of your hands. You don't have to think about it. At the end of the year, you've got an installment with them. Because again, life happens. If you've got cash sitting in an account somewhere, then there's always that temptation that, well, I had a bad month, so maybe I'll just take a little bit out of that tax account and I'll put it back in next month because it's going to be better. But again, that never happens because life always happens around us. So yeah, it's better just not to have that cash on hand. You just move it off, pay Revenue Canada. If you do overpay them, they will send you a refund at the end of the year. So that's always a good thing there. So there's that. And then the last point on this slide here, Revenue Canada is not in the habit of negotiating with individuals on a reduction in the amount to be paid. So phoning Revenue Canada up and saying, hey, can we reduce my $10,000 to $5,000? They're not going to go for it when you talk to them one-on-one. But if you do run into that situation, or if you've got employees or anybody else that is in that situation where they owe Revenue Canada some money and it's kind of getting to that point where it's unmanageable, that's what our office can look at in this case, because as a licensed insolvency trustee, we can do the negotiating. We could set up some sort of arrangement to deal with the outstanding debts, whether it's through a consumer proposal will talk to Revenue Canada, and we can actually get them to reduce that balance. You pay us, and then it kind of cuts them off from you. We deal with them, you pay kind of through us, and at least it gets rid of that debt and that headache of having to deal with Revenue Canada in that case. So, and then as far as kind of setting up that cash flow, big thing, diversify. So kind of have more than one client, have more than one supplier. It's really kind of the old adage of just don't put all your eggs in one basket, because if the supplier goes out of business, if the client stops coming in, then it really is going to hamper the cash flow. So by having more than one kind of source of income or supplier, then at least you know you can continue just kind of carrying on business as normal without having to worry about, either not being paid or not having somebody to pay or supply you with the goods you're needing. So if you do find that you are short on cash, because again, most tourism is kind of a seasonal operation. So the winter months or kind of the off-season months, they might be a little bit more difficult. If you are finding that there is a little bit of a shortage there, the best thing to do is, just open that dialogue with any lenders, landlords, whoever it might be that you're needing to pay. Don't avoid the phone calls, because that just makes things worse. Talk to them, work out a plan, be honest, and just say, hey, we ran into a little bit of a situation here, whether it was within your control or out of your control, it doesn't really matter. Just go to them with that plan to say, here's what's coming up, here's our plan for the next 6 months, work on it from there, and then just kind of keep updating them every 2 or 3 months and just say, okay, we're either on track with the plan or we run into a little bit of a hiccup, just need a little bit kind of more help or more time to pay. But most lenders, landlords, as long as you're open and honest with them, more often than not, they are going to work with you. But if you do find that cash flow and kind of cash is really short consistently, where it's just you're not finding that kind of, you're just not having that opportunity come up where you can increase the cash, it might be time to think about, okay, is it really worth continuing on with the business? I know nobody likes to fold up their business, but you kind of these points here, you really don't want to throw good money after bad. So if you're finding that you're always kind of running short, if you are putting money in as the owner, investor, shareholder, you don't want to put too much of your own investment in there, because it's just you're kind of chasing your tail and it's never going to come around. Don't commingle funds. So don't mix the personal with the business. Don't use personal credit for corporations without some sort of plan, because unfortunately that's what we see a lot of, is individuals that have started a business, they've maybe run into a situation where they've run out of funds, had a bad year. They take their personal investments, they put that money into it, they start using their personal debt, lines of credit, to try to build the business back up. But if it doesn't work, where the business plan isn't working or the business itself is starting to fail, well, now you're personally liable for that debt as well with no business. And that's kind of when we see individuals coming in to talk to us, just because they've tried to sustain a company or a business that maybe shouldn't have been continued. And then the other kind of big thing I can stress here is just be very careful with personal guarantees. So pay attention to what you're signing, and just know that, yes, there are personal guarantees out there. The banks do like to slip them in every once in a while, especially on lines of credit, overdraft, things like that, where if you've got a corporation, if that corporation doesn't pay, then yeah, you are going to be personally liable for it. So watch those things. Be very, very careful when it comes to personal guarantees, just so you know what is outstanding and where it is. And then partnerships. Again, cash flow in partnerships in business. Be very, very careful with partners. It may sound good to bring somebody else in. They've got some experience. But in partnerships, you really want to be sure that you're only signing what you are prepared to pay 100% of. So when you're doing your cash flow, if you're looking at the debts of the company or the business, the expenses, if something comes up where one partner splits or the partnership kind of breaks apart, both of those partners are going to be liable 100% of any expenses. So if you can't kind of pay for it on your own, then a partnership might not be the best idea, because yeah, partnerships, I mean, they do break down, and yeah, it does leave individuals kind of holding the bag in this case. So what I would suggest in that case is, yeah, if you've got a partnership agreement, shareholder loan agreement, something, have it reviewed by a lawyer, have some sort of legal kind of counsel done on that, just so that they can see what the agreement says and make sure that the liability is all covered, so that if something does break down, then at least there is kind of that fallback that, okay, you're not going to be liable for everything. Because that's what a lot of people find is, yeah, they're just kind of missing out on that part of the partnership, that if something goes wrong, well, what happens in that case? And then as far as the growing your business goes, best advice is always just find some advisors to help you out. So whether it is your accountant, the bookkeepers, lawyers, anybody that you can ask for help before you need it. So try to talk to somebody about, yeah, your cash flow, how to prepare it, and how to kind of plan for the uncertainties in life. So some things you can plan for, seasonal businesses, you can plan kind of when your seasons are. If it extends a little bit, great, but you always want to kind of prepare that cash flow on the shortest season that you might have. So if it's kind of a March to September business, yeah, maybe plan April to August. And then if it does go beyond that, great, the cash flow is just kind of that much better. But that way, at least you're kind of planning for the worst case scenario, just depending on how our weather plays out, other major events that may happen. So advisors can help you with that. They can kind of do that cash flow, that tax planning, kind of all those things that goes beyond kind of just the business itself. It's, yeah, how does the finances work? And then if you do have a major contract, so if it's kind of one major thing, make sure that you can handle the cash flow if the payments are going to be late. So there's always issues that come up. I mean, it might not be our own fault, but maybe a supplier is going to be late, maybe a client is late with payments. You want to make sure that you've got enough cash kind of on hand in the bank. You're not dipping into credit to try to pay for it. Or if you do, you've got the plan to pay it back very quickly. But yeah, you want to make sure that that cash flow is there so that you can handle if payments are late or if people aren't paying you, just anything like that. And then the margin on the job, the having sufficient working capital, it's all those things that you plan for in the cash flow. You know that, okay, worst case scenario, this is kind of where we're at with our cash. The margin on a job, I mean, you do want to make sure that you're making decent amount of money depending on what's kind of going out. So it's always those things. Before you take on any contract, before you sign anything, ask somebody to make sure. Maybe somebody can take a look over the contract and see what might you be missing, what's out there that, hey, if this job doesn't come through, or if we've got kind of other expenses, how much is this going to really affect our bottom line? And the bottom part here, I mean, most new work comes from regular customers. That is kind of standard of business. It's easier to kind of keep your business or keep your current clients happier. You do gain more business out of that rather than trying to go out, pull in new customers, because you've got to spend a lot of money on advertising, whether it's kind of whining and dining new clients. So don't forget about your regular customers, because that's where most of your income is going to come from. So yeah, keep them happy. Yeah, treat them kind of as well, if not better than new clients. That way, it just, again, that keeps that cash flow coming in just a little bit more regularly from that perspective. And then whether you're starting a business or you're kind of in the kind of startup phase, you really want to make sure that you've started that business for all of the right reasons. So whether you've got a great idea, something that's unique to the market, something that really is going to make the most sense to you. Also, you want to make sure that you can make more money and be happier in your own business. So yeah, you want to have that business plan, business idea, the cash flow in place. You want to make sure all that stuff is working properly kind of at the start or before the business even gets going. The kind of the worst reason to start a business is just to have tax write-offs, because that's, I mean, right there, the business is not going to succeed just because you're writing off a bunch of business expenses. Yeah, it's great for tax purposes, but from a business perspective, it's probably not going to take very long before you run out of cash and you'll have other issues to deal with, not just the tax. And then really understanding the work that is involved. So any small business owner, it is a 24/7 job. It's not like an employment where you can work 9 to 5, 8 to 5, whatever. If you own your own business, you're constantly thinking about it. So keeping that in mind, knowing that, yeah, when you get home, you might have to do your own bookkeeping. You might have to look at your own kind of supplies. You're always looking at that cash flow. You're always thinking about how can you increase that money. So it's never, you can never shut it off when you kind of own a small business. So yeah, that's, keeping that in mind is always something to think about there. And then as far as helping others, so if you are in a position where your business is really doing well, you've got a friend, family member, other business owner that may be struggling and they come to you for some help, no problem helping them. But if you are going to, then maybe get some security against the loan that you do give them, just because that way, if something goes wrong in their business, which hopefully it doesn't, but hey, you never know, at least you've got that security. And to make sure that that security actually holds up, there is a registration that you can make against that loan and that security. It's the personal property security registration. So if you haven't looked at it, there is websites. It's very clean, it's very easy to use. But by registering that to security, then at least if the loan defaults or if the person defaults on the payments, you can go after your security and you're not going to be out too much money in that case. So yeah, again, that's just helpful advice, just to make sure that everything does kind of work in your favor, because you don't want to put your own small business at risk by helping out a friend or another, or a coworker or whoever it might be, just because they default on their loan. And just some pitfalls to consider when it comes to cash flows, businesses, things like that. So the third family generation business, I mean, it's not often that businesses can pass down, because at some point, whether it's kids, grandkids, they don't really have the interest in doing that business. So if that's the plan, is to kind of keep passing it down within the family, take a look and consider whether it is kind of the best way to do it. Have some sort of succession plan. And then the insurance, just, yeah, read the fine print, understand it. If you trust your advisors, great. If you've been with them for years and they've never steered you wrong, perfect, not a problem. But yeah, if you're kind of new to it, check the insurance. And again, when you're building kind of your cash flow, don't forget about the insurance payments. Don't forget about all those other things. What might happen if this, whether it's construction downtown or anything else that happens, do you have business interruption insurance for stuff like that? It's all those little things that you do want to consider just when you're building your cash flow, building your business plan, that have I thought of anything and everything that could possibly go wrong. So I know it's a kind of a lot of negative, but hey, you do want to kind of plan for really kind of the worst case scenario. If it never happens, that's great. That's kind of the way we want it to go. But life, like I said, life always happens. So you want to make sure that everything is going the way it should. And then just as far as kind of what we do, so yes, as far as our business goes, we will do free consultations for individuals. So whether it's yourself, co-workers, employees, family members, whatever, anybody that has sort of any issues when it comes to cash flow, if somebody's dealing with debt, employees, so small businesses, if you've got employees that are stressed out because of their debt, if they're getting phone calls at work regarding outstanding bills, if there's Revenue Canada garnishing their wages, things like that, we will talk to people about all that stuff. It's free to contact us, to talk to us about that. We make you an appointment, we sit down, we'll go through the ins and outs, the cash flow, we'll make sure that everything is kind of all taken care of. If you've got somebody maybe sitting in an office somewhere, well, call us while you're meeting with them. Just let our receptionist know that you've seen this presentation. They can track me down. I can talk with you while you're meeting with somebody. We can kind of just chat about your cash flow. If we've got that in front of us, then we can kind of take a look to see, have you thought of this scenario? What about these expenses? So always kind of keeping that in mind, that it doesn't cost you anything to talk to us. And yeah, if you're in a situation where you're running into debt issues, shortages on cash flow, you can keep your business going. So we can restructure things. Like I said earlier, if you've got Revenue Canada kind of hounding you for outstanding payroll, GST, taxes, we will deal with them. We can look at some sort of restructuring, consumer proposal, something like that, just so that we can take care of the debts for you, so you can get that clean start in the business and start moving things forward. So yeah, don't be afraid to talk to us. Yes, we do consumer proposals, we do bankruptcies, but typically our bankruptcy is the last resort that we get to. We will look at all other options available to you before we talk about a bankruptcy, because we do want the small business to continue. We want that business to kind of either needs a little bit of a restart, a jump start, whatever you want to call it. But yeah, we don't want to have to close places down if we can avoid it. So yeah, that is kind of the cash flow part there. So my information, phone, the office phone number, email. If I don't know if there's any questions being popped up or.
Thanks, Dustin. I've been monitoring it. So far, there are no questions. It was a great presentation. There's a lot in there. I know a lot for people to think about. It is, I think, a really important comment that cash flow planning right now, as businesses are starting to see some revenue coming in, making sure that they don't get too excited about that, because the long-term situation may be different when we get to the fall. So we really don't know what's ahead of us. There is a question now in from Lauren Richardson. What is the status of provincial and First Nations leases with resort fishing operators as far as the CECRA is concerned?
Quinton, you want to take that one?
Absolutely, I can take it, but unfortunately, I don't have an answer. I'm not actually sure. I'd have to look into that one for you. yeah, if you can reach out to me afterwards, Lauren, then perhaps
Lauren,
we can chat.
Lauren, we'll keep that question and make sure that we get an answer back for you. Any other questions? There's two hands up. I see a hand up from Daniel, but I don't see a question from Daniel. And I see a hand up from Ellis, but I also don't see a question from Ellis. So if you want to type your questions either in the Q&A or the chat. Oh, there's Daniel. In regards to the state of the economy and cash flow, how could a company diversify to stabilize cash assets in case of unstable markets?
So, yeah, I mean, the diversifying is just kind of taking a look. The problem is, yes, we are in a very unstable position right now. So, yeah, that might be, I mean, I don't know, Quinton, if you can add anything to this, but that might be, if you've got a financial planner, they would have more information on kind of what the more stable investments at this point would be. So kind of looking at that and seeing, and it might be, yeah, taking very low risks at this point and just seeing, yeah, you just want to see consistent kind of increases in your investment, kind of safe, secure at this point. I wouldn't take any risks just because we don't know what September is going to look like, if there is going to be a second wave of this kind of coming through. So yeah, I wouldn't be investing kind of really heavily at this point.
Okay. Thank you very much, Justin. And the last question that we have right now is, what relief will be available for seasonal resorts in the fall and winter? Sole proprietor, no staff.
Yeah, we haven't heard any relief programs for the fall and winter yet. Most of the programs end in the summer. They're here throughout the summer. I think the government is waiting to see how the economy works in the fall. So I guess it's almost a wait and see situation to see what if they're able to come out with more more stimulus programs for the fall, because I know a lot of organizations right now are spending a lot of cash, and this is the time where they're supposed to be saving cash in order to get themselves through the winter and the fall. But there's been nothing announced that I'm aware of at this moment.
Great, thank you. Lisa Schultz has asked, how do I proceed with extending my CERB?
That is really going to depend. So I would look online at the CERB application. I would have to look into it. I can't remember if they've extended the program. It's been a short while since, or probably a couple months since I've looked into the CERB program to see if it's been extended or not. But it's going to depend on your personal situation, and then if the government is allowing or how long it's allowing to continue. It looks like it was up till September, so it should still be going. Just looking at my notes here. So yeah, you should be able to work through your application online.
Yeah, and I think, Quinton, if you're eligible, then you just go on every time there's a new tranche, which is usually monthly, and just reapply the way you did the first time. Yeah. And Ellis O'Brien, are there any support programs for sole proprietorship tourism businesses with casual employees only?
So I guess the question here is, though they're casual employees, I'm assuming that means they're not on payroll. And if you're not on payroll, then they're not going to qualify for the CEWS program, which is a 75% wage subsidy, which is a little bit harder. You've got they've updated the CEBA, which is the $40,000 loan. So they've updated that now for organizations that don't have payroll and said, look, as long as you have expenses, then you should still qualify. And that has, I think they updated it about a month ago, but the banks hadn't been informed yet. And it was taking a while. I heard that was supposed to open up I think that was last week. I think it was the 19th when things were supposed to open up again. So I'd look into the CEBA. That should be online with your bank. But that's at least the $40,000 loan with the $10,000 that can be forgiven.
And can past employees, this is from Shirley, can past employees apply for CERB even if it was just seasonal work?
Yeah, I believe so. I guess it depends on the situation, right? If it's seasonal work, then they were they didn't quit on their own accord, so then they should qualify as long as the employees qualify based off of all the other requirements, right? There's that income test, is $5,000 last year. And there's the $1,000 in the 4-week period. They can only earn up to $1,000 in the 4-week served periods. So as long as they qualify based off of that, I don't see why they wouldn't be able to apply.
Great. Well, that is the questions that we have, and it is 10 to 11, which I think is the end of our session. But I really want to thank both you, Quinton and Dustin, for your time this morning. These are important questions and important concerns as everyone moves forward to try and keep their cash flow going and maintain as much revenue as they can to prepare for what could be a challenging winter. So let's hope not, but let's be ready. As you said, Dustin, prepare for the worst and hope for the best. And I think that motto has never been more true than it is right at this moment. So thank you both again very much. And we will chat with everybody soon.
Well, thank you. It was fun.
Thank you.
If you do have a question that you didn't ask, you can always send it to recovery@totobc.com, and we will make sure that we find out something for you. Thanks very much.
Thanks.